so that I can get both of our very important speakers as well on the stage and we can get our next session started. Now, we all know that consumers are increasingly choosing products and services that are based on the ESG credentials. And innovation is where we all often notice it's playing a very important role in providing opportunities in terms of digitalization of banks. One such innovation that also came into the existence in the field of banking was the introduction of payment banks. So let's talk about achieving sustainability for payment banks. First up, we have with us our speaker who comes with 24 years of prolific experience in various functions of banking with core competence in the areas of business strategy and product development. We have with us the Managing Director and CEO, India Post Payment Bank, Mr. J. Venkatramu. So if I could please invite Mr. J. Venkatramu on the stage. Thank you very much, sir, for joining us. And our next speaker, in fact, is an Indian Army veteran with over 28 years of experience across military service, banking, channel management, and he's responsible for developing and executing innovative solutions at Fino Payments Bank. We have with us none other than the Chief Operating Officer of Fino Payments Bank Limited, Major Ashish Ahuja. Thank you very much, sir, for joining us. Can we have a huge round of applause to welcome both of our speakers here? And all the ones who are still standing here, a humble request, let's have you quickly take your seats. We'll take those discussions offline over high tea. Quick check there. Thank you so much. I'm going to quickly hand it over to both of our speakers, Mr. J. Venkatramu and Major Ashish Ahuja. Over to you, sir. Thank you so much for joining us. Let's get the fireside chat. Let's begin that. Over to you, sir.
Thank you. Thank you so much. So what we do is quickly get straight into the topic. And I think, the audience here was well aware, and I think she's already given out the fact. This was something new that the Reserve Bank tried out many years back. The model's now in operation, my sense, more than 5 years. So, without much ado, I'll just quickly try and get Venkat your thoughts on the fact that this has been a different journey. It's a differentiated bank. So what's your sense on India Post Payment Bank's journey, as also for payment banks in general, in terms of sustainability and, kind of keeping that going on a long-term basis?
Okay, thanks. Thank you, Ashish. I would like to start this on a very, very lighter note. I would say that, the regulator started this as a differentiated licensing banks. But, somewhere, probably in the scope of the bank, it's made these banks differently abled. So, the scope of payment banks as such had been very, very limited with the way it got started. So one of the problems that was supposed to solve by payment banks was about financial inclusion. And as we all know, during 2010 to 2015, there were not enough number of banking outlets, so to say. So one of the thought process was to provide licenses to those entities who have got good network, and that way both the telecom operators and India Post found to be suitable for these kind of licenses. So one of the challenges I would say for payments bank had been, one is the compliance and the other is capital requirements. So today, if you look at a couple of other players, especially in the prepaid space, the PPI players, non-bank PPIs. So there's absolutely, there's hardly any difference between a PPI and a payment bank as far as the model is concerned. But when it comes to some of the compliances, basically that gives some sort of an overhang. That is one point. The other point is about, given the limited scope, the kind of relaxations that a payment bank requires in terms of monetizing their own customer base is also very, very limited. So where the para-banking services, which can probably be enhanced for payment banks, or maybe some relaxation can be given to payment banks, that is something has not come forward. Again, the challenges there could be related to Banking Regulation Act, because there are certain restrictions as far as that act is concerned, which probably is coming in way of regulation. So given the composition of all of this, yes, the going had been very tough for payment banks. But thankfully, each payment bank had found their own sweet spot, because of the fact that every payment bank is promoted by already an existing promoter, basically looking at their own set of or segment of customers or the space in which that they are operating, could probably pose some sort of leeway for them in terms of achieving sustainability. And thankfully, a couple of these banks have already become profitable, and they're looking forward to enhancement in terms of the overall model, which could maybe better the going of the payment banks.
Thank you so much. And what do you feel could be some of the things that payment banks could do differently today to differentiate themselves? Any thoughts on that?
There's not much. Unfortunately, there's not much. But given the fact that they've already been, their parents already been operating in some space, the parent organization, that probably is giving us some relief for them. At least, if I talk about the India Post, since India Post is already serving large customer base, especially on the small savings side, so that is providing some sort of readily available customer base. Other than that, there's not much, I would feel.
Perfect. So the only thing that I like to add on to that is one needs to remember that 2014-15, when these licenses were kind of thought of and the model was conceived, life has changed dramatically. The set of challenges at that time and today have changed dramatically. So innovation will remain the key for payment banks. Try and utilize your licenses more and more to what it allows you to. Because other entities, fintechs, PPI players, everybody's, the encompassing policies have changed over a period of time, making it more and more a competitive environment for limited function banks. Having said that, I think there is still enough and more room for the model to play out in its current avatar. Naturally, there are lots of conversations with regulators and other bodies to allow certain leverages or certain leeways in terms of the model to where it stands today.
Yeah, on a similar note, I would like to ask one question, Ashish, since you're also operating in the same space. Now, what kind of innovative strategies can payment banks adopt to diversify their revenue streams, given that there are very, very narrow scope of business lines that these banks can pursue?
So, from that perspective, I would only put it in a very simple thing. We at Fino follow a principle called DTP, stands for Distribution, Technology, and Partnerships, and that's the three pillars on which we built the bank, and touchwood 13 plus quarters and counting of profitability. The results have just come out a few days back. So, one is scale, very, very important. You've got to have large number of touch points. It's an asset-light model with over 13.5 lakh merchant points today, spread across some 94% districts, 94% plus pin codes of the country. The kind of transactions we are doing in terms of numbers. Today, I think we've clocked more than 2.55 lakh crores worth of transactions in terms of throughput through the bank's environment. So, as long as the transaction income, which constitutes more than 90% of the balance sheet today, is healthy, there is zero credit risk, though I'm sure we'd like to have some on the books, but the model doesn't allow it. And hence, it's the balance sheet income or the name income is rather less at this point of time. And those are the rooms which are still available to move forward. But what we've got right is within the given set that the license allows, CASA, our transaction income, the platform that we've made for our partners, both on the cash management side and the transaction side. Today, over 200 plus partners on CMS, over 70 partners who are using our APIs. So those are the kind of innovations that we brought in to kind of make sure that we're a sustainable and profitable entity going currently and moving forward.
That sounds interesting.
Keeping with thought of sustainability, the thought that comes to my mind in terms of one of the major pillars is technology. Venkat, what would you say is technology playing a role for you at India Post Payment Bank, and how are you leveraging that?
Oh, I think today for any bank, not only payment banks, but for every banking organization, technology plays a very important role. But coming to the payment banks, that plays much more bigger role, because of the fact that the margins that are available for payment banks are very less. The number of revenue streams are very less. So the other side of addressing the problem is that how can you reduce your cost? How can you improve your process efficiency? How can you make your processes more paperless? So going by our experience, at least I can say that by making a lot of these transactions and activities paperless, had instilled, some sort of efficiency, whether it is opening of account or transactions, or for that matter, any set of services. I think the scalability comes through technology. That is number one. And number two, in terms of product innovation, where payment bank is supposed to source some of these products and services through third-party tie-ups. That's where technology plays a very major role in terms of go-to-market, how fast you can go to market using technology and integrating your services or your channels with third-party services. So that's where the technology plays a very, very important role. But having said that, it's also important that how can you utilize this financial technology partnerships, if there's anything that is available, because one of the areas that banks often seem lacking is the customer experience. So that is one area where probably technology can help in bettering the customer service and customer experience, especially through digital channels.
Thanks, Venkat. So I'm, kind of just to add a few anecdotal examples to it. If you ask me, folks sitting here, anybody from technology, can you raise your hand, please? Okay, so I think he's a lone warrior here, so I think a round of applause should go out to somebody like folks who enable us day in and day out. And if you ask me, the single most important vertical in the bank, whatever the sales guy would say, we bring in, we go do this, do that, every product sales guy would love to claim all the credit. But I think technology is one pillar. If you don't get that right, you are, I would say, quoting failure very, very aggressively as an organization. So, let me put it, the Aadhaar stack, the NPCI stack that we have today, these are huge enablers that have been put in place for us as a country. Today on the payment side, I think India is leaps and bounds ahead of any developed nation in this world. Look at APS, complete COVID, average of 30,000 crores plus every time PM Kisan goes out. Right, reaches people in a matter of minutes. A button press, account gets credited, button press, money is available to be withdrawn through the Aadhaar-enabled payment system. Look at the success ratio there. Tell me another country, all developed nations running on check systems till today, anarchic. So that's what technology has enabled anecdotally. When we went to market as a bank, we carried out a survey and we asked customers. They said account opening 25-30 दिन बहुत सारे document मांगते हैं. E-KYC, paperless account opening without a signature, under 5 minutes, over-the-counter debit card, take a green pin, walk away from a Fino payment bank point. In the interland, back and beyond of any place in the country, 94% pin codes, that's what technology has done for it. You can think of a process, but finally it is technology that's going to deliver it. And all hygiene, data center uptime, compliances, security, all that is a given, though that's all, things of the past. You're not going to clap for your technology guys for getting that right. It's the complexity that they have to deal with because you are changing your processes and competing in an environment which is so complex today that every time a change is made, you have to ensure that something else doesn't get impacted, and especially in a regulated environment where you're playing with public money. So that's where I think technology is the biggest differentiator within payment banks or in the payment space altogether. Because you're competing with fintechs and what they bring to the table is technology, plus the fact, I would say lighter regulation, and banks naturally have a heavier regulation.
So Ashish, we spoke about competing with fintechs. That's what you mentioned. I think we have many competitors, whether it is universal banks or other types of banks, including fintechs. Given that there is so much of competition, and given that the same regulatory actually gets applied to these set of banks, so how do you see payment banks navigating this regulatory landscape and ensure compliance and, more importantly, sustainability?
So my 2 bits on it is that the regulation applied, at least when the model was conceived, the perception was that there would be a different set of regulations and a lighter touch or a lighter audit regulation for these set of banks, because these are, when you have a limited function, you don't expect to be on the same, I would say, measured on the same yardstick as a scheduled commercial bank, right? But, well, things have moved on, and at least for myself, being part of the team and seeing the audits that we go through, there is no differentiation in the yardstick, and hence it is one of those really tough ones to negotiate in terms of optimizing your operations, meeting the cost parameter that you want to meet it, and ensuring that you are in line with all regulations, audit, security, and hygiene. But you will have to come up with products with margins which will have to ensure that you have the money, the money to spend on it, one. But from an approach point of view, I would say this is a 0-1 situation. This is a 0-1 game. You cannot have an attitude to say, can do this but can't do that. So it's unfortunately or fortunately 0-1, and hence one just needs to get in there and do its bit and work out products and margins and a P&L for the company that can support all this moving forward.
I think one of the interesting piece of debate that goes around in the market is that there are multiple types of banks. I mean, there are neo banks, digital banks, apart from whatever is regulatory-wise approved. So do you think some of the fintechs who are going after becoming neo banks should opt for this kind of model? Does it make any sense?
So my personal view, I think if you're a neo bank or a fintech, I think it's a good space to be in. Nobody likes to be regulated, right? Regulation is always tough, whichever form or factor it comes in. But naturally, along with when you're a regulated entity and the license allows you to do certain things, specifically in India's context, it's a question you need to weigh for yourself in respect to the type of services that you will be allowed to offer as a financial services entity, whether on the fintech side or a neobank, because finally at the end of the day, you will need to plug into the banking system. And it'll have to be between those two entities, the bank at the back end and the front end fintech or neobank, in terms of the roles and responsibilities and the ownership of the customer, because that's where relationships either get marred or made or marred. Because when the customer does well for the entity, the bank would want to sell the better products directly, and that's where the front-ending entity would feel that why would I not have complete ownership? So these are questions entities need to answer for themselves before you decide whether it's a go or a no-go to apply for the next license in terms of moving forward.
Yeah, I think definitely on the regulatory side, if there are certain relaxations given to this model, it would do much better. Given the fact that already some of these payment banks have established their presence, have established their business models, maybe some enhancement in terms of allowing them for some sort of additional facilities or some relaxation where monetization probably can happen. Let's hope for some relaxation on the regulatory front.
Absolutely. So moving on, Venkat, what do you feel are, been 5 years since most of the banks went operational, the payment banks, and 3-4 of them are profitable today. So what do you think are examples that one can pick out of these in terms of sustainability, or emulate some of these examples and take it forward in the industry or within the payment banks itself?
I would say that every payment bank is unique and has a unique advantage. Why? Because of their lineage or the kind of promoters that they have been promoted by. If you talk about, say, Paytm started with completely digital, and so similarly in our case and maybe Airtel, we already had certain established business models. So it's more about and you are already operating in the BC space. So given that each one of us has our own relative strengths as an organization, and having got these payment bank license, it's all about how do you find that sweet spot? What is that sweet spot? And what kind of segment of customers that you want to serve, and what are those relevant services which at the end of the day can actually make revenue, because the business fundamentals will always remain intact. So from that standpoint, probably payment banks have come a long way in identifying that particular business model, and everyone has find their profitability path, and so are we. We also have learned our lessons over past couple of years, and we've realigned our business models given the strengths that we have, the weaknesses that we have in the space that we operate. And that helped us in at least understanding the customer requirement, customer psyche, and extend those set of services. The other areas where you can see, some of these payment banks have really done well is that having identified the space in which they're operating, there are services like cash management services. For instance, some of the banks have found really good value in that business, apart from the core business, which is purely financial inclusion driven and DBT driven CASA story. And apart from that, yes, what are the third-party services that we all can provide, especially with regard to financial services like insurance, where you come up with customized service offerings for that segment of customers, maybe some such sachet-based insurance services. So these are some of diversifications that have taken place in the payment bank space. And we will see more to come in the years, in the future, which can probably add to the bottom line. And what is also important, more from a regulatory standpoint, is that today with growing technology, the barriers between various industrial ecosystems has been getting blurred. So it's more about how you can offer additional services, be it on the banking side or the non-banking side, as long as you have a service outlet, as long as you've got a channel. So it's more about adding more services and more revenue to your bottom line.
So you see payment banks having different types of models that have gone to the market with. What's your sense on, digital is growing leaps and bounds. What's your sense on the phygital or the assisted model that some of the payment banks run with today? And what do you think, is that something here that's here to stay? Do you think India is ready to go fully digital, or it's going to be a mix of both? What's your sense on that?
I think every payment bank comes with that unique strength. The strength of payment banks is about being physical, where you have a physical presence and then a digital technology strength. So where you can add more number of services. And today we are seeing a diversified segment of customers as far as the country is concerned. You have completely digital savvy, self-service based customers, and then there are other set of customers who completely depend on assisted channels. Given this diversity is going to stay. And more importantly, customers in the country are always used to some sort of advisory kind of services. So which is where this digital channel or assisted channel would definitely help. And going forward with more and more services coming in, these kind of assisted channels will only add value. And maybe they will fill in the gap of whatever traditional relationship banking managers that normal bank branch does. So I have another question, Ashish, on that note. Given that we're talking about multiplying more and more services under the umbrella of payment bank, how can payment banks collaborate? I know for sure that payment banks, in order to become sustainable, have to source more services digitally or physically. Given that fact, how we can collaborate with other players in the ecosystem, more importantly, to achieve sustainability and at the same time, keeping in view the customer relationship aspects.
So let me put it this way. I think the fact that the payment bank license itself ensures that you have to go into the courtship period and quote other companies and entities who may or may not, which is something that you do not enjoy under the license. So it is inherent into the model. The faster that one has understood it, the better it is. The fact that you're not allowed to do lending, you will need to move out towards NBFCs today. We do a lot of referral lending. We do it along with a lot of NBFC partners. The account is not allowed to go beyond a limit of 2 lakhs at the end of the day. We've got partnership with Suryodaya Bank. We've just launched FDs with Suryodaya Bank. So, anything and everything that if you want to give an all-encompassing feeling to the customer when he walks into your touch point, there is no other avenue but to build on those partnerships. And, the fact is that if I look at our CMS business today, our cash management, broadly in the range of, what I would say in the range of about 4,700 crores plus per month is what we're doing in terms of throughput. And that's with across 175, 180 clients that we had. And when I compare this to what we were doing about 3 to 4 years back, that's a humongous growth. So how does all this get built? It's basically through a partnership network we built up. And that is one of the key pillars that we've done. So in the end, I would say, hum hi hum hai to kya hum hai, tum hi tum ho to kya tum ho. साथ में मिलकर काम करेंगे, कुछ ना कुछ तो ढंग का बन ही जाएगा.
What about customer ownership? Any thoughts on customer ownership? When you are sharing these services between, say, other bank or financial institution, do you feel that becoming a challenge for future?
No, I think customer ownership is something, at least when we set up the bank, we were very clear. The biggest move for us was we were one of the largest, or I would say the largest business correspondent in the country, where we were working for other banks. The retail side of the bank, we continue to do that under the corporate side, where we do the BC business. But the retail side is where we own the customer. And the big difference is that the entire product, the journey, the process, the technology is completely end-to-end owned within the bank. And the next big move for us, I would say, is to push on the cross-sell and bring in new products to offer, because the 4 or 5 verticals which are really doing well for us, are kind of here to stay. That base is built. Now it's a question of how we can monetize that data, how we can monetize the 70 lakh plus accounts that we opened, which we continue to thrive upon, and we continue to build on our CASA base. So that's where the next big move for us is going to come as a bank.
Thanks, Ashish. I think there's definitely light at the end of the tunnel. I'm hoping that given the fact that we've already there on the profitable path, with more relaxations coming in, probably there are more takers for this sort of business model. Let's hope so.
With that, any questions that any of you have, we'd both be happy to take them on.
I think it was a brilliant proposition from you, Mr. Venkatramu, to say the collaboration amongst competition. I think I'm hearing for the first time an industry talking about this. Now, in this direction, like you said, hum hai to hum hai. So that was very well said. So do you think there is a need to competitors to come together and identify common set of problems where both the institutions or multiple institutions are putting efforts to solve that problem, and then maybe the collaboration may come in there? So one such area which I feel is a digital literacy, where every institution is putting efforts to educate. So do you see all the competitors coming together and investing in the digital literacy so that it gives a meaningful results to the so many frauds which are happening?
Yeah, I think thanks for bringing this up. When Ashish asked about the phygital model, that's one of the inherent advantage of the model. Why? Because you get to interact with a person. And literacy plays an important role. Not only just financial literacy here, it's also about digital literacy in terms of do's and don'ts. I'm happy to share that we've initiated one such program with FIAX, where we're trying to provide this sort of literacy to the end customers through our end users, where especially what kind of fraudulent calls, what are the kind of patterns that fraudulent calls are happening, and what to do, what not to do. And it goes a long way in educating the customers. But unfortunately or fortunately, whatever measures that we take, the practices can always differ, because every day you will see some of the other new trick coming into the market. So given all of that, I think the fundamental aspects of not sharing the credentials of the account, not sharing the credentials of the other personal details. So as long as these things are better understood by end customers, then I think we'll be able to solve this problem. And this has to go hand in hand, not only with the customer awareness, but also the kind of FRM practices that you implement as a bank utilizing technology.
So I think my 2 bits on that, I think finally at the end of the day, the liability of the customer, especially in a segment, the lower you go in terms of your segment, that much more the responsibility and onus is on the organization rather than the customer. Because in terms of savviness and understanding, it's also going to be difficult to get through to the customer. My suggestion would be best bet, figure out more and more processes and technology by virtue of the fact to make it more simpler and to make it more idiot-proof as also secure. Having said that, it's always going to be a journey because fraud in itself is a business model. So you're competing with them too in the marketplace like anybody else. So I requested some of my friends over here not to ask tough questions, not ask too many questions. I think they've honored that. So I think with that, thank you very much.
Thank you.
Thank you.